presentation contains current opinions of Moez Ansari, Chief Investment Officer of Compact Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Mo's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello everyone, and welcome to the Market Wrap YouTube update for November 11th, 2024. I'm Mo Ansari, President of Compact Asset Management, and thank you for joining me today. Well, don't forget to subscribe to this channel. Just click on the subscribe button, and whenever I post an update, you will be notified, and it's absolutely free. Well, the election is over. The world did not end one way or the other, whichever way it went, and it was one of the best weeks in the market that we've had in 5 years. So it's been a wonderful return as far as the market is concerned, and that's what we are looking at right now. For the week, the S&P was up 4.69%. All the people that sold out because they're worried about the election are saying, wow, wait a minute, what happened? Market year to date, as of Friday, was up 27.17%. 27%, all the people who sold out in April when the market came down because election is coming up. This is what happens. You should not get all tied up with the politics. As you've heard me say for 30 years, politics and economics is like oil and water. They do not mix. Keep it separate, and that's how your portfolio will continue to grow. Dow was also up 4.61, but the biggest winner is small caps, up 8.61% last week. Tremendous year-to-date now, up nearly 20%. So it's catching up with the S&P, the Russell Small Cap Index. Small cap is expected to benefit with the Republican red sweep, as it is being called. Yes, the House has not been decided, but I think there's a pretty good chance that the Republicans will also take control of the House. But looking at small caps, those are companies that are based in the United States. They're not dependent on income from overseas. And as President Trump has said, that he is going to put sanctions on tariffs on China and Europe, and that could slow down some of the large cap companies that derive a lot of their income from overseas. It could benefit small cap companies, and that's why we saw the tremendous gain in small caps. NASDAQ also had a good week, up 5.76%. Dow topped 44,000 for the first time last week. It is above there today, again, nearly up 200 points. Consumer discretionary was the big winner last week, up 7.6% for the week. Consumer staples were the worst, but everything is positive for the week. If you look at everything, it was positive. Technologies up 37%, consumer services up 36%, which is Google and Meta and things like that. Financials continue to do well, up 32% year to date. Healthcare has been the slowest sector, while the S&P up nearly 27%, as I mentioned earlier. So the markets have had a wonderful year. Where do we go from here? We'll take a look at it, but we still have all of November and December to go. Oil was down up a little bit, but I think it's going to come back down as the tensions in the Middle East are starting to ease, and that is a good sign for the oil market. Interest rates also lower from 4.37 to 4.30, which is something good. We got to 4.5%, and that was a problem for the market. But once we saw the rates start backing off, now we'll have to wait and see if we can break below. Real economy versus feeling about the economy. This is consumer sentiment, and this is the misery index. You can see that that is incumbents lose, average election year. We usually see consumer sentiment better than the misery index. But we know the results of the election. It's over. The country has made a decision. That's the way we're headed. Like it or not, that's reality. And that's where we have to look at what economic impact it's going to have, the election, and how the policies could change. There's not a lot, tariffs or something, but we'll have to wait and see how much tariff is put in and where they're applied to. If it's China, only China, and it's 20%, that can be absorbed. If it's 50 or 60, that might increase prices a little bit and inflation. What happens to Europeans? Are we going to put restrictions on tariffs on European products? So we'll have to wait and see until the president-elect comes into office, which is January 2nd. But we will start to hear about some of the policy changes between now and then. And that's what we have to look at. How will this impact economically? A lot of economic data coming out this week. We've got the PPI, the Producer Price Index. We've got the CPI coming out day after tomorrow. It's expected to be a 0.2%. Then we've got the PPI on Wednesday. Expect also 0.2% is the consensus number, unchanged from the month before, so, or a little bit higher than the month before. Then we get core PPI, which is what the Fed looks at very closely. Retail sales, also very important, expected to be down slightly. We were at 0.4 last month. We're expected to be at 0.3. Import prices, capacity utilization, those are not. It's going to be the CPI and the PPI that come out on Wednesday and Thursday, and they're going to have I think, some kind of impact on the market, not a lot. Looking at the technicals, we run up nicely. We've got a 5 now here, which usually is the sign that we're topping out. Whenever you see a 5, like we did here in July, we had a nice size pullback or an ABC correction, ABC. That's what we get, 1, 2, 3 down, and that's what we're seeing. So we're at a 5th wave support now. There's this big gap that we left, huge gap that we left, and that is going to be something we'll have to watch very carefully. Support 58.43. We are at 6,000 for the S&P this morning. We'll have to wait and see where we close. Looking at the 20-day moving average, 57.35. On a weekly basis, again, a very nice run up. This is wave 3. We could see wave 4 to the downside. Around 5,600, 56.55 is support. That's the 20-week moving average, and 53.09 is the 50-week moving average. NASDAQ, again, a huge gap after the election, Thursday night to Wednesday morning, and now we're also looking at a 5th wave here. Could see a little bit more on the upside, but we are getting close to the end where we could see some kind of pullback, a little bit of a pullback in the market, for whatever reason that'll be. But again, I would view that as a buying opportunity. Weeklies, again, we're looking at 5th wave top, new all-time highs for all the markets, so it's been a wonderful run up. 10-year note hit nearly 4.5 last week, and then the rates plummeted. We are down to 4.3 today. Support is 4.22, and then around 4%, 4.2%. So that's something to watch. If we come down here and we can break through to the downside, that would be a good sign for interest rates to the downside. Crude oil, big down day today, down nearly $2.20. As I've mentioned, I think this is going to be support right around here, $66 to $67 a barrel. We're about 68 and change today. So I think we're headed lower as the tensions seem to be simmering down in the Middle East, and there's talk about a ceasefire. We'll have to wait and see if that happens. Small cap, huge move up. Now we're right up against this 245 resistance. This is the high that I've talked about from October of 2021, nearly 2 years ago, and then we were stuck in this range for nearly 2 years. Finally, we broke out, went sideways. Now, big move to the upside. If we can get above 245, we're 241 today, probably 258 to 285. This is the small cap index for small cap stocks. And as I mentioned earlier, the Trump election could be positive for small caps. Looking at gold, tensions are easing. As I mentioned, we saw a 5th wave top right here. Gold, I thought, could come down to 26.50. We've broken below that. We're at 26.29. Big down day today, down nearly $66 a barrel or $66 an ounce. Here, next support is going to be right around the 2600 area. If we break below 26, then we're looking at here, which is support around 2500 and then 2400. Any pullback down to 2400 could be viewed as a good opportunity in the gold market in the long term. Those are my thoughts. Those are my views. Don't forget to subscribe to this channel. just click on that. Whenever I post an update, you'll get an update on that on your computer that I posted an update. Have a wonderful week. I will be back with you next week. Until then, good trading.
This presentation contains the current views and opinions of Moise Ansari, Chief Investment Officer of Compac Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compac Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that overfocus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.